When you talk to clients about inflation, Jose, what is the nature of those conversations? How concerned are they?
Well, thank you very much, and great to be here today. When we talk to clients, they are concerned not only about inflation, but also about the reasons why there is inflation. And particularly for international clients, they're concerned about inflation coming through disruptions in global supply chains, supply bottlenecks, which is making life more difficult for them. They're also concerned that those increases in things like commodity prices and food prices, increases in imported prices, may not only affect goods prices, but also services. And therefore, that at the end, this may have an impact on wages, and this is something that may compromise their profitability. So I think that it is in the interest of the world economy for inflation to be kept under control. And from that point of view, I very much welcome the attitudes of central banks and the guidance that they are providing, that they would do whatever is required in order to keep inflation stable.
Okay, so do you think then, Jose, that we need to see bold and aggressive action from central banks to really get that message through to investors and to markets? Because the ECB, for example, is very much behind in a sense of when it will get to its first rate hike compared to the Fed.
It all depends on what the dynamics of inflation are in specific markets. I think that we have a global phenomenon and we have some regional differentiation. The global phenomenon is, yes, that due to a number of reasons having to do with the recovery in demand and also these supply side disruptions, we are having a higher inflation. Then the question is, what is the perspective? For example, in the United States, I think that with inflation having hit 7%, I think the Fed is right, looking at other indicators and at the tightness of the labor market, to think that it is time to start sort of giving some forward guidance regarding interest rate increases. And the members of the Federal Open Market Committee have already signaled that in their deliberations that they contemplate 3 hikes this year. Markets are pricing 4 hikes. I am more on the lesser than the more hikes in terms of my expectations, but I think there will be some hikes, and that is something which is entirely reasonable to bring inflation back into control. In the case of the euro area, for example, I think the situation is different. I think that the economy is not at full employment yet. There is more spare capacity, and if you look at the forecasts of the ECB, I think that they sort of contemplate some reduction of inflation going forward. So I think that a more gradual approach to withdrawing monetary accommodation is warranted. So I would not be in favor of anything sudden or drastic, but I think that some gradual withdrawal in different areas, depending on where they are, I think that's reasonable.
So how high do you think rates will ultimately get, Jose?
Well, it depends, and it's going to be different in different countries. If you think of the major economies in the world, I think that interest rates are going to be higher in the United States than in the euro area. And if you look at the other very large economy, which is China, what you can see is a very different prospect for interest rates. Interest rates are being cut, contrary to what the expectations are in advanced economies. And this is something which is going to lead to a monetary policy differentiation, which is going to have consequences for foreign exchange markets going forward.
Jose, this is Creedy in New York. We've talked about the Fed, we've talked about the pandemic, but something we don't talk about enough is, of course, geopolitical risk. What is the bigger risk for you? Russia, Ukraine, U.S., China, the energy crisis in Europe. What are you watching?
Well, we watch everything because at the end we live in an integrated world and everything has repercussions. But for us, the China-U.S. relations are particularly important because we derive a very significant part of our earnings from Asia. It is actually the largest contributor to our overall revenue. And we have been following and navigating the uncertainties in the relationship between these two superpowers of the last few years. And I can tell you that this requires some skill, it requires prudence, but also we take a very professional approach. And what we think is that there are opportunities that come with some of the challenges. And we have been helping our clients to sort of redirect their investments, to diversify the global supply chains, we have been a constant force in favor of global trade. And I think that, some of the bilateral tensions in global trade between the United States and China have led to more trade between the United States and other emerging markets, and between China and other emerging markets. And we have been there in order to help our clients and make sure that things go in the right direction.
Jose, so you're very familiar with the way that the handling of Omicron, the handling of COVID is being done very differently in different parts of the world, of course, and you're managing a global business in that context. Here in the UK, where I am, we've just seen announcements this week that suggest that the work from home mandate has gone away. Are you bringing people back to the office? Are you telling people from tomorrow, from today, come back? What's the suggestion in the UK?
Well, yes. What we're telling our people is that given the government's, if you think of the UK, given the government sort of announcements, yes, we are telling people that they're free now to come back into the office. Before, only those jobs that were considered to be essential and that needed to be performed from the office were coming into the office. But now we are consistent with the government guidance, and then we expect to have our colleagues come into the office. And I think that's something that would be very helpful, because you miss a lot of this sort of continuous human interaction in those spontaneous moments that arise from time to time. So I think that that's something which is going to happen as of next week. On the other hand, we are in for the hybrid mode of working, meaning that not everyone, even in normal times, has to come back into the office every single day. So we have asked for our employees to give us our wish list in terms of how would they like to work. We have also looked at what are the needs of the organization in different business in different areas, etc. So we have provided for flexibility. And I'm very happy to say that this is something which is remain consistent with productivity going very well, and also with higher employee satisfaction. So it is a hybrid way of working that we will continue to embrace, but now we'll make it more of a reality, because people would also be able to spend time at the office.